Historically, 5 bull markets all started in October. What about October this year? As you can see on this chart, in October is where Bitcoin started to go absolutely parabolic. What's up, my crypto legends? In this episode, we are going to analyze the local situation here for Bitcoin because yes, we have been very much in a strong uptrend throughout September. And just yesterday, we got a pretty aggressive move to the downside. Is this corrective or is this just the start of an impulsive move to the downside? And we are going to see the start of October actually being a little bit bearish. Well, this is what we're going to take a look at, guys. We're going to take a look at the bullish case scenario and the bearish case scenario, the major levels that we want to take into consideration. Just like yesterday, mentioning the naked point of control and the daily level to get a reaction bounce mentioned on yesterday's live stream. Looking for that double bottom to get the rise. We actually got a triple bottom, tested it one more time very early this morning, and now getting the bounce. We will be analyzing the different scenarios, the levels and the waves that could form in the next coming hours and couple of days. So make sure to stay tuned till the very end. Quick reminder, the World Series of Trading registration is starting this week. I will be providing this sign up link very soon, guys. If you haven't signed up for Bybit just yet, remember that you do get that $500 airdrop bonus, and you can withdraw the profits from that $500, okay? It's a position that you can have for free once you sign up with the link down below. Of course, you do have 10% cash back on bluffing. It's a no KYC platform, just with an email and a password, no identification. You can start trading, guys, and you do get 10% cash back from your initial deposit. Make sure to take advantage of that 10% cash back. Let's dive in through the technical analysis. We're going to keep it relatively simple and easy for the viewer, right? Throughout the last few months, we are in a very complex, large corrective structure. There's no reason to believe that this was the low. There's no reason to believe that we're going to absolutely rocket in the next coming days to hit all-time high. So we need to zoom in on the lower time frame and look at what has been happening throughout the last few weeks. And what is very clear here is that we had a very strong uptrend throughout September. When we get an ascending channel, we can see here how we just ever so slightly broke the support from the channel, okay, just yesterday with that aggressive drop. So now your question is this a bear trap? And we are just going to see the price action rocketing here throughout the next coming days to get back above $66,000. I need to say that this is definitely a possibility, but I am leaning a little bit more bearish, and there are certain levels of resistance that I'm going to be paying attention to for a lower high. If these levels of resistance are broken in the next coming hours, then obviously I have to say that, yeah, the price is bullish and we're likely going to take out the highs from Friday above $66,000. So pay attention here because I'm going to keep it relatively simple, analyzing the waves, Fibonacci, and the timing on where we currently at. There is one bullish case scenario. Let's just say that this has been a fake out. We've got the beautiful bounce from that naked point of control from the consolidation of last week. We got the daily level. We also had the 382 Fibonacci from this pivot low to the pivot high, because what we are speculating here is in a potential larger fourth wave to get a rally in the coming days. This level to get the reaction bounce was mentioned throughout yesterday's video update and live stream, guys. This is the place where the price needs to bottom out. Wait for it to retest either in a double bottom or a triple bottom. We are talking about the $63,200 zone, and that is where the price bounced very nicely, as you can see here on the chart. When we do zoom in on the lower time frames, we got that beautiful reaction bounce from the daily, the naked point of control. It was getting choppy. However, the bounce did happen of almost $1,000 throughout the last few hours. So we know that that confluence level was very strong in the end, despite getting several wicks here to the downside throughout the last few hours. finally getting that significant bounce. So let's zoom out. Okay, we are getting the bounce. So what now? What are you analyzing right now looking at the chart? Well, let's talk about the bullish case scenario. Let's just speculate that this has been a three-wave corrective structure, which I think does decrease the probabilities because the impulsive move that we had yesterday, Monday, was 2.6 times longer than the impulse that we had from Friday highs. Okay, and this is very rare for a C wave for it to be so impulsive. When we get the extension here from the highs of Friday to the lows of Saturday to the highs here from early Monday, we can see the 2.618 hit. This is most commonly for a third wave. Third wave usually gets to 1.618 or even the 2.618 or even 3.618. Now, it would even be rare for a C wave to hit 1.618, but it's more common than actually hitting the 2.618. So we need to understand that, you know, hey, maybe this was a third wave. We're just going to bounce and form one more wave to the downside and a fifth wave to sweep up the lows here, right? This is kind of the target zone. We want those lows to be swept. But if this is an ABC corrective move, because we are speculating that we formed a one wave here on the second week of September, we formed the second wave right over here in a corrective structure. We can see three waves in a two wave. Now, all of this that we've had throughout the last week has been a very strong impulsive move all the way up here, topping out in a third wave. And we could speculate that a fourth wave could be on the formation right now. The main reason why on this third wave from the second wave end, we can clearly count 5 impulsive moves to the upside. We've got 3 peaks, 1, 2, 3, completing 5 waves, and we've got 2 corrective structures right over here, as you can see on the chart. So we cannot say that this is not possible, because it could be very much possible. Now, we're hitting the minimum requirement here for that fourth corrective wave, which is already the 382 Fibonacci. Even the 236 is a minimum requirement, but we already hit 382 Fib, as you can see, getting that beautiful bounce here very early this morning of almost $1,000. So what levels, you know, if you did not long from here, this was a great longing scenario, as we mentioned on yesterday's live stream, right? We talked about, you know, this level is very strong, the $63,200 range. It got a little bit wicky to the downside, but overall looking for a significant bounce after a few hours, right? We finally claimed that low, and the bounce is happening as we speak. So what is next? What is the next scenario? We are bouncing right now. What would be the bearish case? The bullish case, to be simple and clear, if we start getting back inside of the support of this ascending channel that should provide us resistance, I am talking about the $65,000 range, okay? If we successfully break back above inside of the level, overlapping the pivot lows that we do have at 65,300 from the weekend, then eventually the price action coming all the way up to that level is going to be quite bullish, in my opinion. Without a doubt, yes, we could be looking at a much larger corrective structure in a WXY, but I would definitely consider the bullish case scenario where we could be already finishing this ABC in the fourth wave, and we are starting 5 waves here to the upside to finally get above the highs from Friday and complete that larger time frame fifth wave. It is definitely possible if the price action is going to start pumping very aggressively and start hitting above $65,000. It is something that we want to take into consideration. However, we could be completing a much complex corrective structure, all right, in a 3-wave, and another 3-wave right over here and getting into a WXY. But we'll be analyzing that scenario here as the price action does develop. So we want to zoom in and talk about the bearish case scenario, which would be, we have completed here 3 waves to the upside. 1, 2, 3. We have formed an ABC corrective move, and we are going to start moving to the downside quite aggressively, either in a 3-wave, right? Because we've just been forming 3 waves throughout the last couple of months. 3 waves here, 3 waves right over here, 3 waves here, We could form another 3-wave down because we're in a very large multi-monthly complex corrective structure. So we're just going to have to analyze very carefully. But how would I recognize that we are going to go to lower levels, right? What do I need to pay attention to? Well, there is certain levels that I am interested here throughout the next coming hours. The most important one, without a doubt, is the 50% Fibonacci from this high to the low. This zone is very interesting indeed because it's kind of the limit zone if we are speculating here that we are starting an impulsive move to the downside. I do not want the price to overlap much that 50% Fibonacci, especially not getting back inside of this ascending channel and getting above $65,000. If we go all the way up there, I have to believe that this is no longer an impulsive move to the downside, and we could either start an impulsive move to the upside, okay, and we're going to be very bullish to complete a larger, higher time frame fifth wave, or we're just going to be forming a very complex, large corrective structure throughout the next coming days, okay? But it will no longer be bearish, and I would not be expecting a strong impulsive move to the downside if we overlap $65,000 where we have the golden pocket. So when we zoom in on lower time frames, yes, I would like to see that level being hit, which is very much close to the 50% Fibonacci. Now, what happened throughout the last few hours is that we formed 5 waves to the downside, being the wave 1 the most impulsive, and the smallest one being the 5th wave, as the 3rd wave cannot be the smallest. So what is happening right over here is a little bit of a flat scenario. There are some levels of interest. We're just about to hit this lower high right over here. It might swing failure pattern. It might break through. If it does break through, the next zone that I'm looking at here is the $64,500 range to see if the price does react at that zone. If we start overlapping and getting to touch the 618 Fibonacci, this will no longer look impulsive to the downside, and I would be looking for either a 1, 2, and then 3, or we're just getting into a larger corrective structure. So we need to be paying attention for those zones to see if we do react, we do reject, because if we do so, then I'm looking for the lows of early this morning or yesterday night, depending on where you are, to be tested to complete an impulsive move back down. Now, of course, if we were to roll over from here or from here, right, and we are coming down to test the lows, what I am looking at is to finally hit the lows right over here where we do have a bunch of liquidity, and I would be very much interested in a swing failure pattern from the lows of this range to complete a 5th wave, because once that 5th wave is completed, I would be really looking for a large bounce. 5th waves are the end of an impulsive move, and you very much like to come all the way up to that 4th wave, which is a target zone. So I would be looking for a swing trade scenario at these lows. It would be preferred if we actually get down to the lows over here, but we might just tap this low right over here on the 26th of September. It is possible also. We're just going to have to be looking very carefully at these lows, which one could get the reaction and how we're moving down, because we might be completing 5 waves down already, and we, already forming 5 waves hitting this low, and maybe this low is the one that gets the reaction and that instant bounce. So overall, paying attention here at the 382, 50% Fibonacci, around about 64,500, 600, to see how the price action reacts at that zone. If it's looking very bullish and very impulsive, then we could be looking at this being the end of a corrective structure, and we could be looking at some impulsive moves up or just a larger corrective structure in a WXY. We'll be analyzing that scenario because that is pure speculation. Not much more has to be said. Higher time frame, if we do roll over with a lower high here, I really like the idea of a 5th wave and getting an instant bounce in a few days to claim that lower high that's formed today. And if we move to higher levels, I'm just waiting very patiently for one of these zones, 50% or this lower high from yesterday, to get a reaction to look for that rollover to the downside, managing risk, paying attention, guys, to what could happen. And that's basically the technical analysis that we have intraday on Bitcoin. Thank you very much for joining. Remember, if you want more detailed analysis, make sure to join the Legends trading community. That is where me, 𝗕𝗏𝘆, the rest of the coaches do provide some setups, analysis, and looking at what is happening more internally. Thank you, and I will see you in the next one.